Okay, a bit of a change coming to the way that property purchases are financed. From the 1st of February, banks won't be able to fold Dubai Land Department registration fees and broker fees into mortgages. Very pleased to be joined on the line by Michael Hunter. He's the CEO of the mortgage consultancy Holo. Morning, Michael. How are you doing?
Morning, Brandy. Thank you very much for having me on this morning.
Thank you for coming and talking to us, or being available early doors. I know it is for you to talk to us. Tell me, what's actually changing in practice? What did banks used to finance?
Absolutely. So I think it's important to understand the cost when buying a property. You mentioned there that historically, over the last 4 or 5 years, you could add 80% of the agency fee and the Dubai Land Department fee to the mortgage. That has recently stopped over the last week. There has been a lot of what we say is hysteria, a lot of messages going around in posts and articles. Now, one thing that I'd like to touch on is fee assistance has been something that has been taking place for the last decade here in the UAE in different guises and different forms. So what we would like to do is assure people that there are other solutions. But in terms of the breakdown itself, basically what that means is for every million dirhams you purchase, it would require a further 48,000 dirhams or 4.8% of the purchase price upfront paid rather than enrolled into the mortgage itself.
Okay, because the banks were rolling the 80%, so the sort of the loan to value ratio of those two sets of fees, one 4%, one 2%. I've heard that banks are getting creative as well about how to fund. What are they doing?
So the banks have always been creative with the fee assistance. We like to call it fee assistance because it's not the full amount of the fees that they would roll into the mortgage. But what they're creating is other vehicles. So rather than putting it over the length of the loan, which may be up to 25 years, what they're looking at is other vehicles to assist you with the fees. Now, that may be a credit facility. It might be a personal loan, for example. Now, that's not to suggest that's the best option for the customer, but I think what we'll find is the immediate impact, people will start to reassess how it will affect them on their initial cash outlay. But quickly, within the next week or so, we will see banks come up with alternative solutions.
Presumably this depends on your whole debt profile, though, whether or not you would qualify for a fixed rate credit card to cover it or a personal loan.
Exactly, and that's why it was very appealing to roll it into the mortgage, because if you rolled the 48,000 dirhams into a mortgage, you were probably no worse off 200, 300 dirhams per month. Whereas if you take that as a short-term debt, you're probably looking at 1,000 or 2,000. So your debt to burden coverage, which is a maximum of 50% of your income, will take a larger impact. And then comes into play the affordability and the rising of house prices and keeping up with that.
Do you think that it will slow the market in any way? Could it put home buying out of reach for some or delay it?
This is the million-dollar question. I mean, when you look at the data, I was looking at the last 30 days of transactions. We're looking at around about 30 billion in transactions of primary and secondary, and around about 9 billion in mortgages. So the mortgages make up around about 30% of all transactions. Taking into consideration the cash purchases and the primary purchases, which is your off plan, I don't think it will have a major impact. I think it will just have a settling period where people need to reassess their finances and look at whether they want to buy at what they originally planned at. I think another consideration point is the fact that a lot of people are purchasing and then renovating to move in. I think that's something that people will put the hold on the renovation and then continue to buy the original purchase price. But no doubt over the next couple of weeks, a lot of people will be reassessing everything.
Does it make off-plan look more attractive?
So off-plan is something that historically and always has been an interesting topic. On the front that there is a massive undersupply in the market. I was watching recently, you had House and House on their head of off-plan. In terms of units that are currently available and for sale, and certainly family communities, there isn't much available. I don't think that we will see certainly a softening in prices until that supply catches up, certainly in key areas. I think off-plan will always be attractive from that point of view. That's why it makes up such a large segment of the real estate market.
Michael, why do you think the central bank is doing this? What's their aim with changing these rules? What was happening?
Yeah, there was a lot of queries as to why this has happened. I believe that it is governance and control. So some banks were allowing this type of fee finance, some banks were not allowing this. Effectively, the banks have a governance that allows them to borrow or lend, up to 80% of a property value. So that property value, what is that considered to the bank? Some banks were incorporating these associated costs as the property purchase. So I think it's creating a level playing field across the banks, ensuring that their debt doesn't exceed their assets on their balances or their balance sheets. So I don't think this is any form of slowing down the market. I think this is a case of creating governance. And I think we'll see a lot of this going forward, not just with the banks, but in the open market as well, more governance from the central bank.
In what kind of areas? I mean, we do have a very hot, very buoyant market at the moment. Where else would you expect to see governance?
I would expect and would be pleased to see governance in areas such as data protection. I think we've all experienced to some degree question marks as to people that are contacting you, for example. I would also expect more controls put in place to protect the banks and the customers. And I think that's why this has been put in place as well, is to ensure that the leverage that consumers are taking isn't too much. I mean, 80% against the property is a large leverage in itself. So increasing that to 84.8 or 85%, they want to de-risk consumers. They want to de-risk the banks. So I believe in the next 6 to 12 months, the main focus will be on data protection.
Okay, we've got 1 minute left with you. Just to put this in context for us, you guys are a mortgage consultancy. You've got a big team of mortgage brokers. What percentage of your customers were choosing to do this, to roll that fee assistance into the mortgage, would you roughly say?
So around about 80% of our customers were looking to roll fees into the mortgage. Now, just to confirm, that doesn't mean that they can't look at alternatives for fee assistance. It just means it would not be going into the mortgage going forward. So that may have an impact on what your monthly payment would be.
Okay, so it was a popular option. Thank you so much for getting up and joining us this morning. Michael Hunter, the CEO of the mortgage consultancy Holo. We appreciate your time.
Dubai Eye 103.8.
Join the conversation.